Well, I did not make my fortune, by and large, on the cutting edge of technology. My first investment was my pitiful savings of a venturesome sort. I invested in a company right in Pasadena, and it was called William Miller Instruments. And I damn near lost all my money. It was hell on earth. We just barely squeaked out with a substantial outcome. And what did us in is that the oscillograph that we'd invented and we were so proud of, and we thought it was going to knock the world flat. Somebody invented magnetic tape without telling me. And by the time we got that oscillograph ready to go to market, we sold three total in the whole world, whole country. So this technology is a killer as well as an opportunity. And my first experience, it damn near killed me.
And so, but that's sort of the other part, right? Over the 75 years that you've been involved in investing.
What that did for a long time was keep me out of venture capital on the edge of technology.
But even I
tried to avoid it.
But even so, in the companies that you deal with, some of them are market leaders at one point in time, and as you just suggested, some technological change or change in preferences will lead those companies to be with less of a market than they used to have for their products. And so how does one think about this over the long term? Because it's
over
the
the long term, the companies of America behave more like biology than they do anything else. And biology, all the individuals die, and so do all the species. It's just a question of time. And that's pretty well what happens in the economy too. All the things that were really great when I were young have receded enormously, and new things have come up, and some of them started to die. And that is what the long-term investment climate is. And it does make it very interesting. Look at what's died. All the department stores, all the newspapers, U.S. Steel, John D. Rockefeller's Standard Oil, the pale shadow of his former self. You know, it's just like biology. So they have their little hour, they have their little time, and then they get clobbered.
And so how does one, as sort of a witness, or sort of in a certain way, one lives longer than the life of some of these companies, sort of deal with change, right? So you could think about an investment portfolio that you created at a point in time will only have validity for a certain amount of time. And so how does one learn to deal with change? It's a question that I always ask my students, and I would just, how does somebody who has to take the resources of very large numbers of people deal with change? Any thoughts on that matter?
Well, some people try to get on the cutting edge of change, so they're destroying other people instead of being destroyed themselves. And those are the Googles and the Apples and so forth. Other people like me do some of that, joining things like Apple, and in some ways we just try and avoid big change that we think is likely to hurt us. And so Berkshire, for instance, owns the Burlington Northern Railroad. You can hardly think of a more old-fashioned business than a railroad business. But who in hell's ever going to create another trunk railroad? So it's a very good asset for us. So, and we made that success not by conquering change, but by avoiding it. Now, Burlington Northern itself has been quite clever at adapting technology to their railroad. Imagine the good luck of being able to take an existing railroad and double deck all the trains and raise the heights of the tunnels a little and so forth. And all of a sudden you got twice the capacity at very little incremental cost, which is what that railroad has done.
So that is a
everybody uses new technology, but it really helps to have a position that almost can't be taken away by technology. How else are you going to carry goods from the port of Los Angeles to Chicago, except on our railroad?
So it's innovation within an economy that continues to follow certain sets of rules rather than looking for the new economy? Is that another way one could think about it?
There are different ways. All successful investment involves trying to get into something where it's worth more than you're paying. That's what successful investment is. And there are a lot of different ways to find something that's worth more than you're paying. You can look for it right in the cutting edge of technology, the way Sequoia does. The most remarkable investment firm in America is probably Sequoia. That venture capital firm, which absolutely fanatically stays right on the cutting edge of modern technology, they've made more money than anybody, and they have the best investment record of anybody. It's perfectly amazing what Sequoia has done.
So you've also talked repeatedly about people's mental biases. As you said, you don't want to be the smartest person, but you want to avoid doing stupid things. So how does one guard against mental biases in one's decision making?
I spent a lifetime trying to avoid my own mental biases. I rub my own nose in my own mistakes. B, I try and keep it simple and fundamental as much as I can. And I like the engineering concept of a margin of safety. I'm a very blocking and tackling kind of a thinker. I just try and avoid being stupid.
So,
and I have a way of handling a lot of problems. I put them on what I call my too hard pile, and I just leave them there. I'm not trying to succeed in my too hard pile.
And do they sometimes come back and require for you to?
Oh, I sometimes get things that are too hard, and when that happens, I fail.
So one has to accept limitations. Is that one of the really important pieces of avoiding these biases?
What I would say is the single most important thing, if you want to avoid a lot of stupid errors, is knowing where you're competent and where you aren't, knowing the edge of your own competency. And that's very hard to do because the human mind naturally tries to make you think you're way smarter than you are.
So as a question that's almost personal given my research, I can't resist asking about innovation in finance. Over the last half century, it's a sector that's gone through several upheavals, radical change. To go back to the time when you were born, there were 30,000 banks in the US. None of them were very, very large. A few New York banks were big. And now the top 20 banks account for almost everything. But the range of innovation in finance has been huge. And there's a debate in academic finance for sure about how much of this innovation is helpful to the markets versus how much actually creates instability.
Well, I have a very clear opinion on that. I think the early innovation that the Bank of America did under Giannini, where he helped all these immigrants with these loans, and of all kind, and he kind of knew which ones were good for it and which ones weren't. I think that was all to the good. That brought banking helped to a lot of people that deserved it. It helped the economy, it helped everybody. But once banking got so they want to be in soft white hands and make zillions as speculators, I don't think those developments have been a plus. In other words, I like banking when they're trying to avoid losses prudently.
So I have one more question, which I think a lot of people have in mind. COVID has been extremely disruptive to American society and to the American economy. How do you think the economy is going to emerge over the next 12 months from this period of great difficulty? And how much of the change that we've seen start to happen is going to be persistent?
Well, my opinion on that is no better than anybody else's. But if you, I think it's quite likely that a year from now, the worst of that will be very, very thoroughly behind us. It's amazing. I watched the polio get totally killed by the vaccinations. And I think they'll spread these vaccines over the world so fast it'll make your head swim. So I think this horrible COVID thing is very likely to shrink to insignificance in the course of the next year.
And what about the transformation to retail? You said department stores are gone, but there seems to be at work a quite massive transformation of retail. Are we going to go back to Old Town Pasadena, for example, or is the shift to online retail more permanent?
I don't think retailing is going to go away. After all, it's been around for thousands of years. But certainly it's been a very difficult place to make money because of what the internet has done. I recently had a friend send me a blue blazer made in China, bought on the Chinese internet, and it cost $42 delivered. And it may not have been a perfect blazer, but it was an amazing blazer for $42. The person who created that blazer gave some little factory an order for 100,000 at once. And those had been pre-sold using the internet. And so it's the most extreme kind of kill all the competitors type of selling I've ever seen. Of course, retailing hasn't coped with something like that. How good is it for Brooks Brothers when somebody can deliver a thing to the internet from China for $42? It didn't look like that bad a blazer to me either. It's amazing. Retailing has gotten very tough. And I think this online stuff is here to stay, and we'll get more and more efficient.
So that could be actually good for the consumer, but more difficult for certain sets of investors, in particular sort of commercial real estate.
Of course, these changes are always bad for some investors and good for others. But when they're bad, they're very bad. I don't think we've seen the full brunt of the changes that are coming in terms of this online shopping.
Well, but there's also...
I'm a director of Costco. And in the last reporting period, their online sales were up 86% over the same quarter last year. Now, that is a significant development. And is it good for other retailers? No, it's good for Costco, but it isn't good for them.
But how much of their sort of brick and mortar stores how much of this is people who would have shopped at Costco in the departments, in the stores?
Brick and mortar stores are already doing well, but their brick and mortar stores have been enormously destructive because of their low prices and efficiency to other retailers.